Hello everyone and very warm welcome to batch 28 of Diploma IFRS by Finpro Consulting. This is a very first session on introduction to what is IFRS, why Diploma IFRS, what is ACCA, why we need to learn IFRS and give this Diploma IFRS as examination. Apart from that, as a part of this session, we will try and understand what is exactly mean by IFRS, how many standards, reporting standards are included as a part of IFRS, what is the structure and numbering system of the reporting standards under IFRS and under Indian scenario. Okay, I will also explain probably, rather it's not important from an exam perspective, but it's important from a practical perspective if you are in India, that how IFRS have been adopted in Indian scenario. So we will understand that, and then we will also understand the reporting standard structure which has been adopted under Indian scenario. So to start with, what is IFRS? IFRS is International Financial Reporting Standard. I'll go to the slide on background of IFRS. So IFRS is International Financial Reporting Standards. This International Financial Reporting Standard, so everyone knows this reporting standard is very vital for the business purposes. If you would like to grow your business and automatically grow your economy per se, then reporting standards plays a very vital role. It's a language of business communication. And that's why reporting standards plays a vital role in businesses to grow and consequently economies to grow. We understand the position of the business or performance of the business during the year with the help of these reporting standards. This reporting standard helps us to prepare the financial statements which conveys the meaning of or which conveys the performance and position of the business. And that's why this IFRS plays a vital role. Now, if you see the why IFRS were required. Nowadays, not a single business is confined to the boundaries of its own country. Everyone tries and do the business outside their own countries. They try to raise money outside the own country. Let's say if you are or your business is in India, you'll try to raise money outside India at a lower interest rates, either by way of equity or by way of borrowings. You will try to do transactions cross-border. So across border, you will import something, you will try to export your goods and services, and thereby do the business globally. Considering this, the entities with which you are entering into such kind of a business, if you're trying to invest money, if you're trying to raise money, we need to understand businesses of each other. They need to understand your business, you need to understand their business. And for that, you need to understand the financial statements. And if you do not aware about the reporting standards, principles, it becomes difficult for us to understand the financial statements. This was the biggest hurdle before IFRS. And as the globalization started and gaining pace, this need became very, grave. And that's why in 1973, IASC was formed, International Accounting Standards Committee was formed in order to develop one common set, single set of accounting standards. Before this, there was Indian GAAP, there was UK GAAP, Dutch GAAP, German GAAP, Australian GAAP, US GAAP. Separately, GAAP is generally accepted accounting principles. It is generally accepted accounting principles. These respective gaps used to prepare financial statement in that gap, which was not understandable, so the common accounting standards were developed by IASC from 1973 till 2000. So they developed the common accounting standards, which are commonly known as International Accounting Standards, IAS. They developed these accounting standards. Subsequently, they did a lot of work. They developed standards from 1 to 41, IS 1 to IS 41, but the work was not, got spread. It was not used by the entities across the nations. Their ISC thought that let's start spreading the work which we had done, and they changed the committee to board. Just the formation changed, the functions of the members changed. So the committee became board, International Accounting Standards Board, IASB. They took over in July 2000 from the IASC, and they adopted all the standards which were prepared by IASC earlier from 73 to 2000. These standards were adopted by IASB. And then subsequently, any new standard which was required to be introduced was introduced under the name of IFRS, International Financial Reporting Standards. And likewise, there are 1 to 17 standards. So the set of international accounting standards plus IFRS comprises of the total IFRS. If we study the jurisdiction, so the study is present on the website of IASB. On the IASB website, if you visit and you check the research done by IASB, they have said they have researched about 166 jurisdictions. They have researched about 166 jurisdictions, like countries, out of which 144 countries are on IFRS. Either they permit the use of IFRS or they mandate the use of IFRS as a gap or generally accepted accounting principles for preparing the financial statements of their companies. So IFRS is almost applicable in 144 jurisdictions out of 166 as of the date. And that's why being an accountant, where the movement has started in 1973, now after 2001, the momentum started gaining to this total activity, I would say, of using common reporting standards across the world for financial reporting. We cannot remain outside the stream. We need to learn IFRS being an accountant. Wherever you are in the world, if your country is a part of that 144 jurisdiction, then you need to learn IFRS. You need to learn, apart from the local gap, you need to learn IFRS. In India, I'm going to speak about what is the methodology that we have adopted for convergence from IFRS to the rather local gap to IFRS, and what is that called in Indian situation or scenario. But just for the time being, I will tell you, we earlier committed G20 nations in 2008 that we will comply with the global reporting standards, where in world, European Union accepted the IFRSs, where the international organizations for securities exchange commissions, like our Securities Exchange Commission in India is SEBI. So across the world, the international organization for SEC, they finally approved. They said that the companies can use the IFRSs for their accounting and reporting purposes, so that the reporting structure seems similar to each other, it can be comparable to each other, and global trade becomes easier. This was the biggest requirement. And this was the point where actually the IFRS started gaining momentum across the world. So we committed in 2008, and accordingly, we have actually declared a roadmap for convergence with IFRS in 2009, but that subsequently got postponed indefinitely, and finally in 2015. So there were valid reasons for postponing that. We had to change Companies Act, so we changed it in 2013. We changed it to Companies Act from 1956 to 2013. We changed and introduced ICDS, Income Computation Disclosure Standards, etc. And finally in 2015, we declared that we are going to converge with IFRS from 16-17 onwards. So in India, We call these standards which are based on IFRS, these are not exactly IFRS. There is about 4 to 5% difference, not more than that. Very immaterial difference, I would say. But with those differences, we call the set of accounting standards in India, which is based on IFRS, as Indian accounting standards based on IFRS, converged with IFRS. In short form, we call it as INDAS. We call it as INDAS. We are not going to discuss much about INDAS when we are discussing on the Diploma IFRS as a course per se. This is the first session, and you also need to understand what is the situation in India. If you're not in India, then you can completely ignore this and you can focus only on IFRS. But why we need to learn IFRS in India? Because the reporting standards in India, which we have converged with, are largely based on IFRS, and that's why it is inevitable for us, being an accountant in India, to learn IFRS. All right. So I come to the complete roadmap, but then why Diploma IFRS, which is designed by ACCA? What is that, and what is ACCA first of all, and what is Diploma in IFRS? So now you are very well aware that in most of the countries, almost 80% of the countries are on IFRS, they permit the use of IFRS. Then it's a good opportunity for us. Being an accountant, earlier we never had an opportunity, global opportunity per se. Like engineers and doctors, they had a global opportunity. But then accountants never had a global opportunity. Now it has been a good opportunity for us. That world has converged to IFRS. Most of the standards are common across the world. If you know IFRS, then the scope of your career increases significantly. The boundaries are not confined to your own country. That's why we need to learn IFRS. Then what is a valid source? ACCA, Association of Chartered Certified Accountants, an institute which is a accounting body, one of the largest accounting body in the world. They have developed a course on IFRS, which is called as a Diploma in IFRS. This Diploma in IFRS provides you the diploma. I wouldn't say this is a degree. This is a qualification, which is an international qualification, a very good qualification for us, which we can pursue and which is very well recognized in the professional circuit, so that if you are Diploma IFRS holder, then the employability chances increases significantly nowadays. Because if you see, at least in India, apart from ICAI curriculum, Institute of Chartered Accountants of India, and other professional bodies curriculum, very few institutes, or rather very few curriculums, includes IFRS as a reporting standard in their curriculum. So the graduates, it may be BCom, MCom, MBAs, BBA, even if they are, MBAs and MBA finance or BBA finance, whatever it is, they may not have the knowledge on IFRS. And to be employable nowadays in India, outside India, it's absolutely important that you possess knowledge on IFRS. This is the qualification, which is a global qualification and accepted over more than 80 countries. This provides us this opportunity to demonstrate our knowledge on IFRS. And that's why Diploma IFRS is a good qualification for us to pursue, so that this will portray your knowledge on IFRS. And again, as I said, the opportunities are immense if you know the IFRS. What is the Diploma IFRS? I mean, about this ACCA, if you see, there is presence of ACCA in about 176 countries across the globe. 176 countries. This is huge spread. It's very well, accepted in Middle East, European countries, East Asian countries, Australia, Canada as well. And that's why this ACCA's Diploma IFRS course is a good qualification for us to have. Now, what is Diploma IFRS? How it is structured? and then probably you will be able to understand the significance of this examination. This is a single paper, first of all. Who can give this examination? Any commerce graduate, BCom or MCom, who has 2 years of experience. So it is for the working professionals who are graduates, commerce graduates. They need to have at least 2 years of working experience in finance and accounts department. Then they are eligible to appear for this examination. Any other person who has a professional qualification of that country, like accounting, professional accounting qualification. In India, it is a chartered accountancy course. So the qualification provided by Institute of Chartered Accountants of India is the direct entry for this diploma IFRS. Then you did not have the working experience. If you are chartered accountant, you are directly eligible to provide or give this examination, diploma IFRS, without any working experience. You are not a chartered accountant, you are a commerce graduate, but you have completed articleship of ICI as per their norms for 3 years or even 2 years, then you are again eligible. Then if you are not a commerce graduate, caught in a wrong job situation, in such situations, you need to have 3 years of working experience in finance and accounts department. Then in that case, even if you are not a commerce graduate, you are from a science background, but you are working in finance and accounts department for at least 3 years, then you are also eligible for giving this examination. This is about eligibility. About examination. This examination is conducted twice. Once in December and second is in June. Correct? December and June are the 2 items. After every 6 months, biannual examination. This examination is 3 hours written paper. It is not multiple choice question paper. It is case study based, scenario based case studies will be asked in the examination. You will have to evaluate that. You will have to provide your answers towards that. This is the situation of the examination, and that's why this is absolutely professional examination and very much important. It's not very easy as well, but if you consider this as a one single paper for which you can study for 6 months, that is the reason this examination becomes simple. Otherwise, the quality of questions is really good. The study which you require to appear for the examination and to pass this is really at a good level, and that's why Diploma IFRS certification, rather I would say Diploma IFRS qualification, has got a good standing in the market, in the professional market. This question paper is of 100 marks, where your passing percentage is 50. You need to achieve at least 50% out of this 100. So again, what is the mode of examination? It is new. Till now, you might have been aware that a pen paper based examination, you have to write with the pen on a paper to solve the examination or the examination questions. Here, this examination is a computer-based examination. It's a computer-based examination. There will be scenarios which are spreadsheet-based scenarios like in Excel, not exactly Excel, MS Excel. There would be word processor scenarios like MS Word, not exactly Word. Those will be provided to you in specific utilities, which is a specific program designed by SCCA, where you can log in at center. So computers and keyboards and mouse will be provided to you. There will be an examiner who will watch around you. You just have to, instead of writing, type it in the Excel and Word based scenarios. So this is again very much easier for us to give this examination, because everyone who is giving this examination must have at least 2 years of experience. So the last examination which they have given before their job, so they must have lost touch to the writing, and that's why it becomes easier to type. And passing this examination, the biggest hurdle was writing for 3 hours. That has been removed now. It is a computer-based examination. So you have to remember about this. Syllabus changes every year, every June. So after June examination, syllabus changes. That is valid for 1 year. So for December and June, this syllabus, the new syllabus is valid. There may be some few changes. There may be change in the pattern. There may be change in the topics, subtopics of any particular topic, and accordingly there will be a change. So the ACCA constantly changes the syllabus to keep updated or in line with the industry requirements, and that's why we need to be aware of the syllabus before start preparation for the examination. This is very vital. Now if you see, in 100 marks the structure is, you will have the first question for 25 marks which is on a consolidation, mandatory. That consolidation question you have to solve, that is for 25 marks, and balance 75 marks has been divided into 3 sub questions of 25 marks each. Those 25 marks will be maybe bifurcated into sub 2 to 3 sub questions of 7-8 marks each, and accordingly it consequently have a total question paper of 25 marks. So one question may be of 10 marks, balance 2 questions of 7 and 8 marks respectively. Broad coverage is there. You cannot really keep anything for the option. Even if the topics are really simple, you can't keep anything for the option. You may be joining our live online batch, or you may be taking our recorded sessions. Then there is a structure of the lectures. You will have to follow that. So entire syllabus which is there for the diploma IFRS has been covered as a part of our lectures, which is spanning over 106 hours approximately. 106 hours are enough. We are giving you 4 different types of books, volume 1, 2, 3 and 4. Out of which volume 3 and 4 you will be referring while attending this lecture or while listening to this recorded session. So that this is a compilation of the PowerPoint presentations which you can see here right now. It's a compilation of that. This is absolutely vital. Whatever notes you make on this particular book, volume 3 and 4, the important pointers, you will be able to revise very quickly a week before examination. So this volume 3 and 4 is absolutely vital. You can flag out those pages which are important from your own perspective while doing revision. The must undergo, kind of pages, you can highlight them, you can fold, you can do the flagging with post-its, etc. and then go through that. It will actually help you to quickly revise the entire syllabus a week before the examination. This is about volume 3 and 4. Then what is volume 1 and 2? Volume 1 is a compilation, it's a theory on all the accounting standards, which is simply in a simplified manner. It's not the as it is standard we have printed and given it to you. We are trying to analyze it and explain in a simplistic manner to you with some kind of diagrams and journal entries and with some examples. So after this lecture, if you feel going through those chapters, you can go through that so that you will be able to read that theoretically. Is it absolutely important to read that? You may choose to read that, because once you read the sessions, you do your own study, then you may choose to just refer a few of the concepts from volume 1. Out of these 4 volumes, what is most important is volume number 2, past examination question. This past examination question book is absolutely important. If you solve this twice, you will not get less than 70 marks. You will not get less than 70 marks. So it is utmost important that you complete the 106 hours of session, do your own study after that, at least of equal number of hours, and then at the same time, parallelly, you can solve volume 2. If you ask me how much time is required for the completing the study, if you are working anyways somewhere else, then you have to take out 2 to 3 hours on a daily basis, and it may take you 4 to 5 months minimum to complete the entire syllabus comfortably. and then balance 1 month, 15 days to 20 days, you can do your revision and get a comfort and confidence on the subject and get a confidence on clearing the examination. So you need to start preparing as soon as possible. Okay, and if the time left is less than 6 months, then you have to plan it accordingly. Then probably I have told you the planning of 5.5 months, you have to reduce it accordingly and complete the your study in a little quicker manner. Then you can spend extra number of hours on weekends, on Saturdays, Sundays, or any kind of holidays. You spend extra hours and then complete your videos and then complete your self-study. But volume 2 is absolutely important. It comprises it comprises of last 10 years examination questions at one place and answers at the other place. So chapter by chapter we have compiled this question, so you can refer the volume 2, but not right now. Definitely go through the first chapter, then check if there are any past examination questions included. There is index, you can go through that, and then you try to read it, solve it, and then you have to again go through that in order to understand the methodology how to solve. In ACC examination, if you ask me what is most important, is understanding the questions, what has been asked in the examination, and how to approach the answer is extremely vital. If you are able to do that, then I think passing is not the hurdle per se. I mean, that should not be the target. I will always tell you that passing, the marks which you should target is always above 65, 60 to 65. If you get above that, nothing like that. So the highest for the last batch is of 85, and 5 people got above 70 out of total 40 people. There was about more than 60% result which we have got this time, and excellent results. So definitely you can score above 60, above 70 as well. So our target should be 70 so that you can get somewhere around 65. If you get more than that, nothing like it. It's a bonus for you. This is about the structure of the examination, what you have to do, how much time you have. So I just quickly tell you that there is 3 hours 15 minutes, not just 3 hours. Earlier this 15 minutes was allotted only for reading. Now this restriction has been removed. You can actually start writing during this 15 minutes as well. Otherwise earlier, 2-3 years back, this 15 minutes you were not supposed to write anything. Had you started anything for writing, you had 15 minutes of penalty, but now that restriction has been removed. You can start writing immediately, but the total time available is 3 hours and 15 minutes. But I will always suggest read the questions thoroughly and then start approaching the question. Okay, so this 15 minutes makes best use of it, and then you will be able to justify or give a justification to the question in your answer sheet. This is about Diploma IFRS examination. I've told you about the training program details. If it is face-to-face, then it would be somewhere around 75 to 80 hours of face-to-face. Balance 26 hours will be on a pen drive again, on a recorded session. It may be on a mobile app. It may be on an online learning platform, LMS. It may be on a pen drive, which is an encrypted pen drive, etc. So this is a structure of a face-to-face. If you are availing for the entirely recorded sessions, trust me, you have to be absolutely disciplined. Take one time for a day where you will not do anything but watch the videos. Otherwise, you will keep on postponing viewing these lectures, which is absolutely not good. It creates a panic situation at a later stage. So I would always suggest, do not postpone watching the videos if you have taken the recorded session. Be absolutely disciplined. There's 6 months. If you are committing yourself to do this course, then give your 110% here and results will be yours. if you listen to the lectures carefully, you will have the conceptual understanding, no doubt about it. But how much conceptual understanding you get, your self-study is extremely vital to get you beyond the line, beyond 50. So you must have equal amount of self-study if you would like to clear this examination. Okay. Now we'll try and understand what is IFRS. I mean, how the standards have been structured under IFRS and how IASB also has been structured. A quick on the IASB. From exam perspective, the structure of IASB is not that much important. I'm just going through that because once they had asked a question on IASB, so quickly on how the structure of IASB is, and subsequently, which is not related to examination of diploma IFRS, but then which is important for the practical understanding in Indian scenario. What is Ind AS? How we have adopted the guidance of IFRS or reflected the guidance of IFRS under Indian situation and scenario. And most importantly, how the convergence process has been taken place in Indian scenario. So first is IFRS. What all standards are there under IFRS? So if you see this, as I mentioned earlier, IASC was earlier formed in 1973, and then there were they continue with the standards till the year 2000. And post July 2000, IASB took over the operations from IASC. The committee became board. They adopted all the standards which were there created by IASC, and any further standard, the nomenclature they changed. If you see the standards which IASC prepared, those were under the name of International Accounting Standard 1 to 41, and then there are SICs. We call it as a Standard Interpretation Committee. So every standard, if there are any ambiguities with respect to the accounting standard, particular accounting standard, the accounting standard is not able to provide a clarity on that accounting issue, then probably the members, they request to throw certain light on those aspects, ambiguous aspects. Those are getting clarified by way of interpretations by the SIC. So any interpretations on IS 1 to 41 which were issued by IASC then from 73 to 2000 were issued in the name of SICs, Standard Interpretation Committee. So currently there are 5 in force, those SICs. The two guidances, IS 1 to 41 plus SICs, were adopted as it is by IASB during July 2000 when they adopted or when they continued the work of IASC. IASB then, after adopting these standards, any new standard they came up with, the nomenclature got changed. Instead of International Accounting Standard, they kept the name as International Financial Reporting Standard rather than International Accounting Standards. So there are currently in force 17 such standards, IFRS 1 to IFRS 17. And any interpretation with respect to IFRS is issued in the name of IFRS IC, or most commonly known as Ifrs. So when we call as IFRS, now there is a confusion most of the times. Students ask us, even corporates ask us that how many standards are there and whether there is a conflict between International Accounting Standards and International Financial Reporting Standards. So there cannot be conflict between these two. When we say IFRS is comprised of number 1, your IS 1 to 41, there are 24 such standards. In between standards are deleted. Few standards are deleted. I'll give you one example. IS 1 is presentation of financial statements. IS 2 is inventories. There is no IS 3, 4, 5 and 6. There is directly IS 7 cash flow statements. And that's why out of 1 to 41 standards, there are only 24 which are effective as of now. Only 24. And then this IFRS 1 to 17. 17 is not yet mandatorily applicable, which is related to insurance sectors, insurance contracts. Currently, IFRS 4 for insurance companies is applicable. So once 17 will be mandatorily applicable internationally, 4 will be removed. So there will be 16 such standards subsequently. Currently also effective standards are 16. So 24 plus 16, there are 40 effective standards, but net issued are 41, out of which one is not applicable as of now. So when we say IFRS, IFRS is a set of IAS 1 to 41 plus IFRS 1 to 17. Currently we can say 16. 17 once it gets applicable, 4 will be removed. So 1 to 17 then. But effective standards will be 16. So 24 plus 16, 40 standards. Plus 5 SICs and 13 Ifrs. So likewise, this is the 4 set of guidances. Set of 4 guidances, we call it collectively as IFRS. Okay, so there should not be any confusion on mind whether ISS is different than IFRS is. ISS is part of the total guidance of IFRS. So standard nomenclatures are different. So when you specially and specifically ask about IS 1 is on presentation of financial statement. IFRS 1 is on first time adoption of IFRS. IS 2 is on inventories. IFRS 2 is on share-based payments. There is no common or conflicting standards. The numbers are different, nomenclatures are different. IS 3 is deleted. IFRS 3 is business combination. IS 4 deleted. IFRS 4 insurance contracts. So on and so forth. So likewise, we have different set of guidances altogether. There is nothing conflicting between IS 1 to 41 and IFRS 1 to 17. There will not be any conflicting standard. Okay, so this is the total guidance. So when we say IFRS, it is IS 1 to 41 plus SICs plus IFRS 1 to 17 plus Ifrs, that is IFRS ICs. So the set of 4 guidances, we collectively call it as IFRS. Alright, so you have to remember this. Now when we say standards, standards have both plain text and bold text. Both have equal prominence. Now the interpretations, probably you will hear it out over the next 106 hours. Those interpretations are definitely not my interpretations. Those interpretations are given by the standard itself. Where standard has given these interpretations? So I'll tell you the structure of the accounting standard, how accounting standard has been structured. Accounting standard is, you will find the introduction paras, then you will have definition and scope of the standard, etc. I am going to speak about what you are expected to take away from the accounting standard or a reporting standard. Accounting standard or reporting standard is not a novel so that it becomes very interesting on its own. You will fall asleep within few minutes, first few minutes, if you do not have motive to read an accounting standard. So there has to be some motive to read an accounting standard. And if you read with that motive, then you will get something out of an accounting standard. So what are those aspects which we need to understand or need to take away from a reporting standard? We are going to discuss that as a part of IS 1 while discussing IS 1 presentation of financial statements. For the time being, we will focus how reporting standard has been structured generally under IFRS. You take any standard, you will have scope of IFRS, definitions, etc., introduction paragraphs. Then you will have actual bare text, which is plain and bold type. Bare text, actual provision. After the bare text, you will have 2 specific guidances from where the interpretations are coming. Number 1 is implementation guidance, and number 2 is basis of conclusion. Number 2 is basis of conclusion. So you can call implementation guidance as application guidance also. AG paragraphs and BC paragraph, basis of conclusion. So application guidance or implementation guidance, or you can also say basis of conclusion. So these 2 guidances along with bare text you receive. So if you go to IASB website and if you try to download the reporting standard, only bare text is allowed to be downloaded. Then your basis of conclusion and application guidance is not freely downloaded. So there are three sections, A, B and C. A is your bare text, B is your basis of conclusion, C is your implementation guidance or application guidance. So these are the three different aspects of the bare text of the accounting standard or reporting standard under IFRS. This will give you a collective interpretation which we will discuss over next 106 hours of the respective standards. Apart from that, so apart from these three, bare text, basis of conclusion, implementation guidance, you will get dissenting opinions. So while framing the standard, there will be differences of opinion between the members of the standard setting body. So the members who are against the provision which is set there, they will provide their views. And if board as a whole decide to go along with the provision which was as original, why there was an opposition, why you have not changed or why you have changed, all that opinions needs to be part of the subsequent to the standard. We call it as a dissenting opinions. Dissenting opinions per se is not form part of the accounting standard. I mean, that's not a mandatory kind of a part of accounting standard. That helps us to have an interpretation of any particular provision. Number 5 is illustrative examples. So any accounting standard, there are practical examples. Let's say IFRS 16 leases. There are a lot of illustrative examples which are provided as a part of the accounting standard itself. I mean, as a part of subsequent to the accounting standards. So when I'm saying it's not a part of accounting standard, but it is given in the accounting standard. So this collective 5 guidances will be there in the entire guidance. But 2 guidances are not considered as a mandatory part of the accounting standard, which is dissenting opinions and illustrative guidance. You can refer that, but you cannot say that this is mandatory applicable. You have to do like this. Mandatory is only the bare text, implementation guidance and basis of conclusion. Apart from that, this is just for your guidance or your reference purposes. Okay. This is how the accounting standard is to be referred. This is how the accounting standard under IFRS is to be referred. Okay. Now, IASB structure. Now there are 3 different bodies. One is the governance body. Governance group, I would say. Then other is the working group or a technical group. And other is advisory group. So if you see this, this is the structure of IASB. This structure has been divided into the 3 groups: governance group, technical group, and advisory group. Out of which monitoring board and IFRS Foundation this monitoring board and IFRS Foundation forms part of the governance group. IASB and IFRS Interpretation Committee forms part of the technical group. So this forms part of the technical group. And actually I will remove this from here. IFRS Advisory Council is a part of the IFRS advisory group. And there are special advisory groups which are also formed under the IFRS Advisory Council per se. This is the structure of IASB, where IASB has around 16 members. Council has somewhere around 40 members. Foundation has 22 trustees. This is non-profit making organization and they have trustees. Monitoring board appoints trustees of the IFRS Foundation. IFRS Foundation oversees the work of IASB and IFRS Interpretation Committee. They also look at the work of IFRS Advisory Council. And in turn, IASB and council members and also IFRS Interpretation Committee report in turn to the IFRS Foundation. This is how the structure, overall structure of the IASB is. As I mentioned earlier also, this is not from an exam perspective important per se, but only once, they are asked a question on IASB structure, and that's why I must take this or conduct this as a part of the session, and that's why I'm covering this as a IASB structure. Otherwise, it's not very important. All right. That time also they have asked it for 3 to 4 marks, not more than that. This is not applicable for the examination. Till now, whatever the discussion we had for last 45 minutes is only applicable for the exam perspective. I have not spoken much about the examination. I have not spoken much about, I spoke about the CB examination, but not in detail. There is a separate video demystifying the CB platform or remote proctored examination. Both remote proctored and CB examination are two different, but both are computer based. Remote proctored examination can be given from your home. So your home, one room of your home will be considered as your examination center, but in that case, you will have to arrange your laptop, you will have to arrange a webcam, you will have to arrange internet connections and electricity, which is uninterrupted, all these four. And if you create that examination center within your home in one room, then that examination can be given from your home. Second, center-based examinations are computer-based examinations. The entire facility will be provided to you at the respective centers. You can choose which way you would like to give the examination. Okay, I have specifically recorded 2 separate videos on this, so you can go through those videos. There is enough information available also on the ACCA website, so you can also refer to that and get your doubts clarified. Alright, I'm not going to explain it as a part of this video. So I have explained it, but separately. Alright, so you can watch those separate videos. So till now, what we have discussed is what is IFRS, why IFRS, why we need to learn IFRS in India. So because of the applicability of IFRS in India by way of Ind AS, we had discussed about this. Why diploma IFRS course? Because there is no other parallel qualification available in India. Then why ACCA, or what is ACCA? Who is ACCA? So we've discussed about these things. We had also subsequently discussed about how IFRS numbers have been structured, what all the standards we call it as IFRS. So as we discussed here, the set of this 4 is considered as the IFRS. Alright, so we had discussed this elaborately. We had seen the structure of the reporting standard under IFRS. Now this portion is not required for the examination. However, if you are in India, based out of India, if you are looking to apply IFRS or Ind AS practically, then you cannot avoid this. Okay, so this is beyond examination. Practically this is important, and that's why I'm discussing this with you. Now what happened in India, I told you before also, 2008 we started that, but that indefinitely got postponed, and finally in 2015 we decided to converge with IFRS, starting from the year 2016-17 onwards in 4 different phases. We adopted Ind AS, which are in line with IFRS. So Ind AS and IFRS are 2 different things. There is only 4 to 5% difference between these 2 sets. Now why we have done this? Why can't we adopt IFRS as it is? So IASB always told there are 2 ways of applying the IFRS in any country. One is an adoption approach. So you take a set of IFRS, apply it as it is for the companies which are reporting in your country. That is called as a adoption approach. Conversion approach is little different. What is conversion approach? Conversion approach is the approach where we take the base of IFRS standards, we prepare our own set. There might be certain deviations. Those deviations are after consultation and discussion with IASB. Then we have made certain deviations. Why? To suit the economic scenarios of our country. And that's why we have made this definitions. If we would like to apply the standards to Indian companies, then those changes must be suitable. The standard provisions must be suitable in Indian scenario. And that's why we have deviated to certain extent under this set of accounting standards, but majority, more than 95% accounting standards are based on IFRS. And that's why we call it as a conversion approach. And the deviations which we have made or certain additional provisions we have introduced are called as a carve out or carve in. Any provision we do not require, we set it as a carve out. Any provision which we additionally want, which is not there under IFRS, we call it as a carve in. So carve out, carve in. But collectively, most commonly referred as a carve out. Carve in is not very commonly used. Carve in and carve out are the terms which are used interchangeably under practical scenario. Okay, so if anyone is saying there is a carve out, so you assume that either there is a removal from IFRS provision or additional insertion, either of it. So that is a carve out. That carve out is nothing but deviation from IFRS under Ind AS. We call it as Indian accounting standards converged with IFRS, which are being notified under Companies Act. We have notified it by way of a Companies Act, and which is applicable to the companies. So these are considered as companies Indian accounting standard rules. So initially those were 2015, but over the year it will keep on changing. Government will keep on amending these, and so every year they will make an amendment. It may be amendment 2016, 2017, 2022, whatever it may be. So this is being mentioned by Ministry of Corporate Affairs. These accounting standards, IFRS based standards, we call it as an Indian accounting standard. They have notified it under Companies Indian Accounting Standard Rules 2016. Okay, so these have the legal or the basis of a law, statutory basis it has, and that's why this is as good as a law. This is applicable to certain set of companies. We are going to look at which set of companies, but excluding insurance companies and banking companies. Excluding insurance companies and banking companies. Most of the cases we have adopted the most recent standard. So most recent applicable standard, as I mentioned under IFRS, is IFRS 16. 17 is not yet mandatorily applicable. So 16 is leases. Don't worry about the numbers right now. If you see volume 3, on first few pages, you will find the standard listing. It's given both under IFRS as well as under Ind AS. If you're, as I mentioned, if you're outside India, then ignore the listing, standard listing, which is mentioned under Ind AS. You can clearly ignore that. However, consider the IFRS standard listing. So IFRS 16 is the latest applicable standard. We have corresponding standard. I have not mentioned you the number, but that has been issued. So that is Ind AS 116. Why the numbering is like that, I'm going to explain it to you. I have not yet explained that to you. So the most recent standard which have been introduced under IFRS, those have been replicated immediately under the Ind AS scenario. So this is very much important. Apart from that, ICAI has also formed a separate committee or group. We call it as Ind AS Transition Facilitation Group, ITFG. We call it as ITFG. This ITFG has issued 23 bulletins. These bulletins are recommendatory to follow, not mandatory to follow. Okay, this 23 bulletins each has at least 10 different types of issues, implementation issues, which helps us to smoothen the process of convergence from Indian GAAP to Ind AS. So we are converging from Indian GAAP to Ind AS. Other companies outside India, what they will do from older GAAP to IFRS. Our older GAAP or previous GAAP is Indian GAAP. From there we are moving on to Ind AS. So how to move that with less or least friction? So ICAI has tried to make this process a little easier by providing guidance on the implementation issues. So we call it as a ITFG Index Transition Facilitation Group. So this is the current situation under Indian scenario. Now, how we have transitioned from Indian GAAP to Index, to which companies it is applicable. Okay. So I will give you two sectors, predominantly two sectors. There are four sectors, but out of which to two sectors it is not applicable. Out of four sectors, insurance company has gone out of the purview currently. Once IFRS 17 will be mandatorily applicable to insurance companies internationally, at that time IRDAI will make this applicable to insurance companies. They have clearly mentioned it. So currently insurance companies are not included. It is excluded. So out of four, one has gone. Balance there are three. Normal companies, second is NBFCs, and four is banking companies. Banking companies also it is not applicable. So they will decide a separate roadmap to banking companies. So remaining two are, one is normal manufacturing service sector companies, and second is non-banking financial companies. So NBFCs. These are similar to banking companies, but not exactly banking companies. They do not have banking kind of a license. They have NBFC license. So there are restrictions to do some kind of a business on NBFCs, which is not there on the banking company. So only two sectors, two types of companies. One is normal company and other is NBFC. Which companies it is not applicable? Insurance and in banking sector companies it is not applicable. So this is non-banking financial companies, not banking companies, I'm sorry. So not applicable to banks and insurance companies, not applicable to banks and insurance companies. Very important. All right. So with these two companies, two sectors, there are common three types to which it is applicable. Common three types. So whatever I will speak for companies, it is also applicable for the NBFCs. So these are the, So these are the three types of companies or three sections of companies. So it's two sectors, three sections, 1A, 1B, 1C. Three sections, common, alright. Type 1 company, which is a listed company or company which is in the process of listing. So when we say listing, both debt and equity securities, even if just the debt securities are listed, index is applicable to that company, or it is in the process of listing. What is process of listing? They are in the process of filing their DRHP, or they have intimated a stock exchange, filed DRHP, they become company in the process of listing. If company is listed or companies in the process of listing, it is applicable to both the types of companies. Type 1. So currently, there are almost 7,000 companies, including insurance and banking companies, which are listed on BSE and NSE in India. So it is applicable to all of these companies. Even so, apart from these 7,000 companies, there are companies whose debt securities are listed are different types of companies. In this listing, SME listing is not included. So if company is listed on an SME stock exchange, small and medium sector entity, it is not applicable to them. Okay, you have to be careful about this. So when we say listing, it is apart from the SME listing. It's only the main board listing, whether debt security or equity security. Number 2, all unlisted companies whose net worth is 250 crores. So net worth criteria is not there for the listed company. Net worth criteria is not there for the listed company. So company is listed, even if its net worth is negative, it is applicable to such company. As simple as that. But company which is not listed, unlisted company, private limited company, such unlisted company, index is applicable if and only if its net worth is 250 crores or more. 250 crores, how to calculate net worth? Indian GAAP net worth, total share capital plus total reserves, excluding three reserves: revaluation reserve, depreciation write back, and amalgamation reserve. Excluding these three reserves, your total share capital plus your reserves, if it's equivalent to 250 crores or it crosses 250 crores, immediately index will be applicable for the subsequent year. you have to be very careful in this. Many times companies do not understand this criteria or do not check this criteria on a frequent basis, and they may default. There are a lot of such examples. Correct? So they have defaulted and subsequent year they realize, oh, I should have conversed with Ind AS a year back itself. So you have to be careful. And type 3 company. The companies which are subsidiaries, joint venture associates of this company. Any company, whether it is listed or unlisted, whether its net worth is 250 crores or not, doesn't make any difference. But such company, if it is the subsidiary, parent, joint venture or associate of a listed company by criteria 1 or by 1B, if its net worth is crosses 250 crores, then irrespective of its own listing criteria or irrespective of its own net worth criteria, it is applicable to these companies. Just because it's a relationship with 1A and 1B. Ind AS is applicable to 1C just not because they are listed, not because its net worth is 250, just because they are related to 1A and 1B in some or the other manner, and that's why it is applicable to them. Alright? So irrespective of listing or net worth criteria, irrespective of net worth or listing criteria, this is applicable to these companies. Exact same parameters are applicable for NBFCs. It's just that it is now applicable in 4 different phases. So we can say for companies, it was now mandatory with this kind of a criteria. It was applicable for 2017-18. And for NBFCs, it was applicable for 2019-2020. So it was actually in two phases. For companies, there were 2 phases. So this was bifurcated in further 2 different categories. Now doesn't make any sense. And that's why I'm not mentioning it. But otherwise, it was applicable from 16-17, then 17-18. So all these companies were compliant with Ind AS in 2018 itself. NBFCs, they started from 18-19, but all these NBFCs which are mentioned here are compliant with Ind AS from 19-20 onwards. Alright, it is still not applicable to insurance and banking companies per se. Alright, so this is the current scenario. With this situation, there are approximately about 20 to 25,000, in fact more than that, companies. It is applicable to them. The indices are applicable to them. So you can see what is the scope of us in India itself. If you are not aware about the indices or IFRSs, it's very difficult to switch job, get a promotion. Forget about that, to perform your duties diligently, it's very difficult because we are changing. It's not just that. Indian GAAP itself is changing on line with Ind AS and IFRS. There are exposure drafts which are already given. The guidance notes have been revised which are on the line of Ind AS and IFRS. So even Indian GAAP is slowly changing, which is becoming Ind AS and IFRS. So if you do not change yourself today, if you do not pull up your socks and study Ind AS and IFRS, it becomes very difficult for you to sustain. You have to, there is no chance, you have to grab this change with both your arms open. It's the sooner the better for you. Now, what else? Voluntary adoption is also applicable. Why somebody will do with the voluntary adoption? Some counterparts of the European companies or the foreign parents whose counterpart is working in India as a subsidiary, they have to report to their parents under IFRS. It is always better that they follow Ind AS voluntarily in Indian situation, then their IFRS and Ind AS are minimalistic. They don't have to prepare 2 separate sets of financial statements. They will prepare only 1 single set of financial statement and they are through to it. So duplication of effort is avoided if they voluntarily adopt it, even if not fitting in any of the criteria. However, such voluntary adoption is not available for the banks and insurance companies, not allowed. To other companies they can do it, but not to banks and insurance companies. Ind AS implementation is not voluntarily available to these companies. Okay. So this is the current situation in Indian sector. As I mentioned, there are about more than 25,000 companies which are within the ambit of Ind AS as of now. What is the numbering system? Very important, because if you see, as an example I will tell you, the last number is Ind AS 116. So are there total 116 accounting standards? Absolutely not. So don't worry about it. It's just that the numbering system is different. Now see what we have done. All right. Now this is the IFRS guidance. This is the IFRS guidance, and this is Ind AS guidance. How we have adopted this. Now see, we are going to do the convergence. Convergence should be such that there are minimalistic differences between the two sets of standards. Otherwise, we are not compliant with the IFRS per se. And that's why we have considered the base as of these 4 different guidances. Sorry, this is 3 and this is 4. I mentioned to you earlier that this 4 guidances, IAS 1 to 41, IFRIC total 5, IFRS 1 to 70, and IFRICs, SICs and IFRICs, collectively, this becomes IFRS. I mentioned you about this. How we have adopted the standard, we have not changed the number per se as far as IAS is concerned. So instead of IAS, we have nomenclatured it, we've changed the name, not the number. We have mentioned it Ind AS, and number is exactly same. So IAS 1 is equivalent to Ind AS 1. IAS 1, you can check this in volume 3. Few initial pages in the listing of standard. You can go there, you can check, you take out those pages. Take out those pages. See IAS 1 is presentation. See Ind AS 1 is presentation of financial statements. Same nomenclature. I mean standard nomenclature. Otherwise, it's instead of IAS, we are calling it as Ind AS. Number is also same. Ind AS 2, IAS 2, inventories, Ind AS 2, inventories. Now, more importantly, subsequent numbers. IAS 3 to 6 deleted, there is no equivalent number under Ind AS. So, Ind AS 3 to 6 are also not there. So, to this extent, we have maintained the similarity between the standard numbers and also the paragraph numbers. So the paragraph number under IAS 1 are similar to those paragraph numbers under Ind AS 1. There is no change in the paragraph numbers as well. So if I am referring IFRS or taking some kind of an interpretation from IFRS, it is very well applicable if that para number is there. Because what happens? I said there are deviations. There are deviations. So if particular paragraph which is there under IFRS, I do not require it under Ind AS. I have maintained the paragraph number but mentioned there as deleted under Ind AS because I do not want that paragraph under Ind AS. So to that extent we have maintained the numbering system as well of the paragraphs. That is deviation, that is carve out. If anything is required which is not there under IFRS or IAS, then we have inserted particular paragraph number in the name A, series A, paragraph 5A, which is not there. It's here, carve in. So these are the deviations. We have maintained these numbers 1 to 41. Instead of just, there are 24 standards under IFRS, under Ind AS we have 23 standards. One standard we do not have equivalent standard under Ind AS, which is IAS 26. Financial reporting by a retirement benefit plan. If few consortium of companies came together, group companies came together, they have set up a retirement benefit plan, and all employee benefit plan, they are contributing all these companies to retirement benefit plan. How retirement benefit plan will prepare and present their financial statements has been mentioned under IAS 26, which is not there under Indian scenario. Ind AS 26, there is no equivalent standard under the Ind AS. All right. So we have mentioned here IAS 26 is not notified. Similarly, IFRS, if you see, the nomenclature here changed. We have not changed the nomenclature. We have kept the nomenclature what we have mentioned here. It's Ind AS, it's Ind AS. But then we cannot have Ind AS 1 because there is already Ind AS 1 as a presentation. We need to change the number series. Here we have maintained the nomenclature here. So we have changed the number series. So IFRS 1 is first time adoption of IFRS. Ind AS 101, it's in the 100 series. Ind AS 101 is first time adoption of Ind AS. IFRS 2 is share-based payments. Ind AS 102 is share-based payments. IFRS 3 is business combination. Ind AS 103 is business combinations. IFRS 15 is revenue from contracts with customers. Ind AS 115 is revenue from contracts with customers. IFRS 16 is leases. Ind AS 116 is leases. That is the last standard which we have. We do not have an equivalent standard to IFRS 17. So once it is internationally mandatorily applicable, we'll issue equivalent standards to the IFRS 17 as Ind AS 117. So likewise, we have only 39 accounting standards. So put together, there are 39. This put together, there are 41. Two standards are not there. Two standards are not there. Correct? So this is how we have included the guidance on the IFRS in Indian situation. We call it as Ind AS, Indian Accounting Standards converged with IFRS. So this is not expected for the examination, but important for us to understand if you are in India. If you are outside India, your last probably 15-20 minutes have been saved. So you can choose to ignore this discussion. All right. Thank you for your patience and all the best for completing the entire 106 hours diligently. Please follow my instructions and you will be there beyond 50. And 50 is not our target. As I said, our target is 60 and 70. So always target that and you will be there. Just please follow my instructions. On an ongoing forthcoming lectures, I will keep on giving you instructions. My team will follow up with you for watching the videos. Please do not ignore. I know all of you are professionals. You have your commitments, professional commitments, personal commitments. But if they are following up with you, it is your reminder, nothing else. They are chasing you, it's for your good. Do not agitate on them. I had seen this in the past, that if we call you, if we send you a message, then you feel agitated that we know our responsibility. I know you know that. It's just a reminder from our side. So please cooperate with that respect. Even if you receive such kind of messages or phone calls, please acknowledge that and try to act on it. Do follow my instructions. Be patient. Be with me. You will be there. Thank you so much and do the next session. Bye-bye.